Okay. So, so trading plan basically is just when you have a plan for trading week, your trading day, your trading month. So that's when you have a plan for trading week, your trading month. It's just it's going to include your targets, your reason for trading. your- Sorry, give me a minute. Going to include your. I want to check one of these things. There's a material that I'm going to send to you after this session. It's going to include your your trading plan. Sorry, it's going to include your trading rules too, because it is very important. It's going to include your trading rules, going to include your targets, going to include your. Let me type it out. So, risk management rules. Thing that is very important. It's really routine. Sometimes, in addition, it could contain your back-tested data. So I know you've had the word backtest before, yeah. So it contains your back-tested data sometimes. So I'll show you my trading plan and my trading journal too. So yeah, it also contains your trading journal. Contains your trading journal. So that's what it contains mostly. Might be other things I haven't put here, but this is important stuff. I'm just going to highlight them then the end of today's class. So yeah. So your trading plan usually includes it's just like you have to plan because if we don't plan, we plan to fail. So if you fail to plan, we plan to fail. So that's just it. So every time you need to have a plan that you go by. Sometimes you have to plan what you are looking forward to be able to, achieve a certain period of time, or you want to challenge yourself to do this or do that or do that. So the first one is the reason for trading. You want to like put your reasons for trading, like why are you trading? Why are you doing all of this? Why are you into trading? So you want to put that in. So that will be able to help you so that whenever it becomes a matter of you are beginning to get frustrated or you are beginning to want to give up, it is what will help you to remind you of the reason why you got into trading. So that is the one thing you hold on to. So your why. That is the major thing. So the next one will just be your daily routine. Daily routine before and after the shots. So every day I have a daily routine that I follow. And whenever I wake up in the morning, at around 4:20, I do my prayer and then I do Bible reading. And then after that, when I'm done, then I know that okay, I have to take a little nap. So take a little nap, 30 minutes. When I'm done with that, okay, I am now fully awake for the day because sometimes I sleep late at night. So I know that I'm ready for the day when I wake up around 7. So when I get up around 7, I know that okay, I should do some exercise for about 30 minutes. When I'm done with that, I take a book, I read for another 30 minutes. When I'm done with that, then I now come to the charts. And when I come to the charts, I know that I have to do like a review of what price has done so far. So I have to do a review of what price has done and look at what price is doing currently. So it is from there that I can determine, okay, this is how I'm going to trade, or this is the range I'm going to be working with for this week. So those kind of things are things that follows. So usually at the end of every week, I do my end of the week review. So to see what are the entries that price presented this week, where could I have gotten in, and which one, and how many of them did I take, and which one went against me, and all of those kind of stuff. So I use that to like do a review, and it is important that you do a review on yourself daily and weekly and even monthly. Because at the end of the month, you want to check your performance. How has your performance been so far in that particular month? How has it been? Like, has it been like, what's your win rate like? Has your win rate been like around, has increased or not? So, and sometimes it also helps you to be able to find out what kind of pairs you should trade. So, that's just I just spoke about daily routine, so we are over that. So the next one is your trading journal. The trading journal includes the trades you've taken for that day. But then most times it is better that before you talk about the trades you are taking that day, you should be able to document how you were feeling or what was going through your mind while you were about to take that trade or when you started your trading day. So what did you see on the charts? How did you feel about what was going on in the market? Were you sure? Were you unsure of what you are seeing on the market and all of that? So you document that, and at the same time, you now put in, okay, this is the trade that I have plans to take. And then when you put your reasons for taking that trade that particular day, and at the same time, when you are done, when the trade hits TP, then you now document that okay, this is what happened and this is how it went. Or if the trade hits SL, say this is what has happened and all of that. So you document that. And when you are done for the day, usually it is best to go through that record for that day. If you are unable to view that record for that day, then when weekend comes, you should go through that record and see how far you did during those days. And then you can now okay go over and say that okay, I need to avoid this one, I need to avoid this one, I need to avoid this one. And so that will bring me to trading rules. That should not have been lower down there, but still. So let me just speak about trading rules. So trading rules are rules that will guide you, like in the market every day. This is what I want to trade. This is what I don't want to trade. This is what I want to see before I get into a trade. These are the things that I should do. I should never do this. I should never do that. For my own case now, whenever I come to the chart, one thing that is very important whenever I trade is that I cannot close a trade manually. No matter how I'm feeling right at that time, I cannot. That is my own rule. I cannot close a trade manually. So it must be automatic or it must be automatic. So it's either TP or SM. So I always make sure to follow that rule as much as possible. And one thing I avoid is trading with emotions. So it's just a follow up to the first one. So to avoid trading with emotions, like taking a trade just because I feel like okay, I have to take a trade and all of that. So make that rule. Another thing that I do is to make sure that okay, if there is a day that I'm feeling emotional or feeling somehow that particular day, I shouldn't be on the chart. Told somebody, or was it on Friday? I was telling them, I said, today I don't want to be on the chart. So today I don't have any business in the chart. And I didn't take any trade for that day. I didn't take any trade for that day because I wasn't feeling so optimistic about the market and all of that. And at the same time, I felt like there were some emotions that were running through my mind then, and I needed to avoid coming to the market feeling that way. So I didn't come to the market because of that. So your trading rules, they are the ones that will guide you. At some point, little by little, you might infract them a little bit. But one thing is, you must ensure that discipline that okay, you stay rooted to your trading rules. Because most times when I was creating rules, in fact, sometimes I add more rules to my trading plan. So just like this weekend now, I discovered on Friday that there were some things that happened during the week that affected my trading in the way. And I had to add it to my trading rules that I must not do this, I must not do that. So I must not chat with somebody during trading day. I must not do all of those kind of things. So I had to put those things in my rule. So you can update your plan, your rule as much as possible. Whenever I discover that there's something that you must take away, so or something you must add. So your trading rule too can limit you. Like these are the number of pairs that I want to be trading. I don't want to trade 10 pairs. I don't want to trade 10 pairs. I only want to have maybe 2 or 3 pairs. Most times it is even advisable to have 1 pair that you want to trade. So those are the things you want to do. Because sometimes you realize that whenever you have so many pairs, you might miss out on the major one that you have. So I have one major pair, and that's US30. All of these ones you see like JPY and the likes, they are just like extra, whatever. So whenever I'm done getting out of my JPY trade, then I might just leave JPY because I don't have any reason to stick to it. It's not my special kind of pair. It's not my major pair. So even BTC is not my major pair. Gold is not my major pair. So my major pair is US30. My major pair is NASA. So those are the ones that I like to trade. So whenever I get ready for the week, I must see what US30 has done, see what NAS100 has done, and then prepare for the week. So the other pairs that are on my list, those ones I also have a look at them. So maximum of 5 pairs at all, if I have on my list, maximum of 5 pairs. So maximum of 5 pairs. So that is what must be on my list. So this one I was just analyzing this for somebody so that they can see what UJ is doing. So I just give them a report about it. I'm not planning to trade this one. This one too, I'm not even planning to trade it either. They just give a report about whatever price does on this one. So these ones, I'm just monitoring this one to see what price will do whenever I get to TP. So that's the trade that I was showing yesterday. So that's the plan. So for gold is to see what the reaction happens. If the reaction is consistent with what I'm expecting to see, then yeah, sure, I know what to do, depending on price intent. And for US30, if I'm going to see price, give me an entry there, I'll take it. And for BTC itself, in fact, there were some entries that I missed on BTC this particular week, and I was not bothered. So, because it's not my major peer, so I was not bothered when I saw it. It was later today that I was now saying that okay, price has already, mitigated and markets may have shifted. Market structure has shifted and yeah, from bearish to bullish. So, in fact, initially itself, I was looking for an entry somewhere where there was somewhere here also. Looking for an entry somewhere. Where was it? I was looking for an entry somewhere. Okay, somewhere here, I think. For an entry somewhere here initially. It was even BTC or ETH. It was ETH. Looking for an entry somewhere here. These two. That might be up here. I was looking for an entry somewhere here. Price to come and pick me and then you move from there. But it didn't. So when price didn't, I wasn't bothered. So normal, this kind of rules are just to help us to become better. Whenever you discover that there's something that you always do, whenever you're on the chart and you are not happy about it, then the next thing is to put it in your rule that okay, I don't want to do this, I don't want to always do this, I don't want to ever do this again. So you put it in your rules. And most times you have to put the repercussion that this is what I'm going to do if I do this. So in my rules, it is there that if I take two losses in a week, let's say maybe two, three, sorry, if I take three losses in a week, then I'm done for that week. I'm not going to come to the chart. After those three losses, I'm not going to be on the chart for the rest of that week. So the rest of that week, I'm just going to be working on, okay, let me go and take a rest, let me take a break, go and rest something, maybe read some other books and stuff like that, and then relax and this kind of thing. Then the next week, I can now enter the market. So if that happens, that is what I do. So that is just the rule that I set. Okay, this is what I should do whenever this happens. So it's just depending on how you see it. If you discover that okay, your time, the way you use your time for the trading day is kind of somehow, then you are going to put rules in place that this is what you are going to do. This is what you are not going to do. So let me go to backtested data. So for backtested data is when you want to test your strategy on a particular pair, and so you want to get data about it. If your strategy works on that pair, and at the same time, how often does your strategy work on that pair on a monthly basis and on a weekly basis. So that is the goal of backtesting. You want to find out how well has your strategy worked on that pair. And when you check how well your strategy has worked on that pair, then you are able to know that okay, this is the amount of win rates that I have. If you took 11 trades in a month on that pair and uh, you had 7 each TP and you had 5 each SL. So at that point in time, you know that okay, your win rate on that pair is around maybe 35%. So it depends. There's a particular calculation for calculating win rate and all. So you are going to know your calculation whenever you go find that out. And so that is how you are going to check and backtest your data. So usually I like to backtest like 2-3 years data. So currently I'm just working on XAU to find out the 2022 data till 2025. I want to get a 3 years data from gold. 3 years data on it. Every month, how well does my strategy feel on it? So I've been able to discover a lot of things, even from checking gold and analyzing gold and backtesting gold to see that okay, this is the pattern that fits gold. This is what works on gold and all of that. So I did the same for Euro USD, for GBP USD. I saw that okay, this is what works for GBP USD, and this is what works for Euro USD. So that is the point of doing backtesting. Backtest to find out how well your strategy works on a pair. So you check your win rate with that pair, you check and all of that. So you can then know if you want to add it to your list to trade. So one thing I usually do is okay, sorry, I can hear you. And the thing is, for backtesting, you will have come to a point that okay, you've realized that there's this strategy that you like, that you're attracted to. I was asking somebody of recent, I said that what is their strategy? What is the strategy that they like the most? Because I discovered that the way they trade is different from the way that I usually see. I see that they are the places where they find entries is different from the places where I find my own entries. So I asked them, I said, what is your strategy? So what is the strategy that you are most attracted to? So I couldn't get the reply initially. So I had to ask the question again the next day that, okay, what is this strategy that you're attracted to? Like, if you see a sweep and a break, is that your strategy? Or if you see a breaker, is that what you're attracted to? Or if you see that price is respecting a key level, is that your strategy? Or you see, so there are a lot of strategies that work. And if it is support or resistance that you are used to, okay, what is that strategy that you are used to? So what is the setup? I mean, so what is the setup that you are used to? So when you are able to identify the setup that you like to see, that is the one that you just go ahead and back test. You are going to check for that setup on any pair whatsoever. So you know that henceforward, if you are going to be trading that pair, this is what you are going to expect to see whenever you are looking at the chart of that pair. So that is the point of back testing. So usually for myself, what I like to see mostly is sweep and break. So, and it can come in various dimensions. So that is the power of backtesting. Backtesting will be able to help you to identify the different models of that setup that you like to see on the chart. So sometimes I can, take a trade and, be like, okay, there's an entry here, all of these kind of things. And somebody will be like, "Ah, why are you taking a trade here? Why do you want to take a trade here? Why do you want to do that?" And sometimes too, there is this one that called that we saw here. This one. I'll say I was taking a trade like this. Another person might want to ask that, what has happened? What did you see? Why all of that? And one thing I see that we had a sweep here and then price touched into demand, and then we came back touched into that demand. This leg was now carrying demand. And later we had price go all the way up here and then we mitigated the demand that was on this candle. And then from there we were able to go up. So this kind of entry might look complicated to somebody else. But already we've had this one why this high taken. So the next thing you should expect is that okay, price will come back into where demand is and from there. So it's just using your reasoning and your setup and what you expect to see in the market to get into trades. It's just what you are used to get into trades. So that's just what backtesting is all about. So you backtest the data. I don't know if you have any other question. Yes. Yes, that is the major thing about backtesting. Backtesting is to get data, to get data about your strategy. So to find out data about your strategy, because there are some peers that some particular strategies work the most for. Yeah. Than other peers. Other peers you might try that strategy and you might not really get the same result that you get. So it is just to backtest to find out and get data on that one. So sometimes whenever I finish at the end of the week, I might go back and go and check what has price done this week. Where would I have entered? Where would I have done this and all of that? That one is not backtesting. I'm not currently backtesting the bid because what I'm doing is I'm finding out, getting info. Okay, we can also call it some data because you're using it to get data on what you will have done and on your performance. So that one is just majorly on what your performance has been for that week. So it is different from when you backtest to find out how your strategy works or how your setup works on a particular pair. So that's the major thing behind backtesting. So we cannot say that okay, we are backtesting whenever we are checking. Can you hear me? Okay, so we cannot say that we are backtesting whenever we are checking for our performance. So this is just replay. You are replaying the week to see what price has done and where you could have gotten in and all of that. So that's the major thing about that. So your trading plan also contains your targets. So it contains your targets. And when you begin to have targets, then that is whenever you get into trading and you want to improve, you want to challenge yourself. You want to challenge yourself to a level. So for myself now, I have a target for December. I have another target that I'm going to be planning for March. I have another target planned for August. So I have targets that I am going for. So I have targets that I'm going for. So that is how I do my stuff. I have targets and I have to be able to achieve them. If I was not able to achieve them, I do a review. What happened? Why did I not achieve this? And that is when I go to my trading rules or my trading journal, and then I document what prevented me from getting to this goal and how can I improve on it and achieve that goal. So and then I set another target and then I work on that. So that's what target is all about. So risk management rules too. It also contains your risk management rules. So the rules that you follow that okay, after price get to a certain percentage or maybe after price has broken through a structure in my trade, then I break even. So that is risk management rules. Or maybe when price has been able to achieve a certain target, I close the trade. But the thing is, usually it is just best to leave the trade open. But your risk management tools might involve using BE or whatever, or you just use a trailing stop loss. So those are risk management tools. You will include that in your trading plan. That okay, this is what I do whenever price has done this or done that. So that is just the major thing about risk management. Yeah, it is not majorly about risk to reward only because it is how you manage your risk. You get it's how you manage your risk that risk management is mostly about. So that one that I taught you the other day about risk management, it is not just only that. So risk management will also come in whenever you are holding a trade and you want to protect your capital. That one happens. So you can decide that okay, I want to use a trailing stop loss if I'm holding a swing trade. So if I'm holding a swing trade, I want to use break even. So for this trade that I've been holding now for the past maybe 5 or 6 days, that one I already said break even like 2 days ago. So I know that okay, price has already taken out some structures. You don't know those terminologies yet. Break even.
Break even and stop loss.
Okay, so break even is stop loss now.
Is this surplus or stop loss?
Stop loss.
Okay, stop loss, sure.
So break even is just when you take your SL to where your entry is. That is what break even is. So that even if at all price comes back down and it wants to
Okay, okay.
and it wants to take you out, then it's not going to cost you anything. So you know that it is where you have entered that your SL is currently at that point. So you don't lose anything for price coming back to where your entry is or where your entry was. So that's what break even is. So the next thing is your reward system for following your rules every day and week and month. So usually whenever you follow, I've been able to discover some things. Do you have a question?
Uh, my question, I don't have to consider my mind. I was just the
Okay.
question is that for the break just that when you adjust, must have time to do that by demo trade. I try to adjust, just have made I just feel like my stop loss, sorry, my stop loss match. Feel like if I don't go below it, I try to adjust. If I don't know if it's adjusted, maybe I just that now it's there who I have, who I someone else.
Okay, so the thing about trading is personal, majorly personal. So I know people who adjust their stop loss lower just to accommodate price if at all price comes down there. But one thing I did when I discovered something like that was that when I said that I was surely shifting my stop loss, I had to like do something, put something in place against it to make sure that I do not make that kind of mistake again. Because eventually at the end of the day, sorry, I don't know if you can hear the sound of the trumpet sounding in my area. That's what these people they do every Sunday. So I hope you can hear me clearly.
Yes, sir.
Okay. All right. All right. So the thing is, there are rules that I had to put in place against something like that to make sure that I don't do that again. So I had to make sure that I'm good enough to be able to spot where the zones should be for my entry
Okay.
and where the zone should be for my stop loss to make sure that I don't begin to shift my SL because I didn't like it. But the fact that even if price now goes against me, I lose more. So, and some of these things are to curb your emotions to make sure that okay, you don't start playing around with your trade whenever your trade has triggered. So just to make sure that you have it set. So these are rules that you put in place. So that is just it. So and that will require rigorous planning too because you want to always be sure of what you are doing anytime you come to the market. And so you want to reduce the risk of not knowing. You want to reduce what you don't know compared to what you know. So that's just it. So then your reward system for following your rules every day and week and month. So there's this thing you also have to have some incentives for yourself because there's a way the brain works. I did a study on training your brain to success. That's neuro success. If you've ever heard of the book, I don't think it's popular like that. So the book is called Neuro Success. So it helps you to understand how your brain works and how you can train your brain to success. So one thing is you need to understand that okay, whenever you want to push yourself to a certain level, there has to be a certain reward that has to come with it. So if you are able to say that, okay, if I'm able to follow my trading rules for this day, this is what I'm going to do in reward for that. So maybe you watch a movie, although watching a movie is not part of my stuff because I'm not allowed to do that. Baba God no gree me. So maybe you want to watch a movie, or maybe you want to stroll or go to a park or go to something or do all those kind of stuff. Or maybe you want to read a book, maybe a fiction or non-fiction book at the end of it. All of those kind of stuff. So you just have an incentive, okay, at the end of that day. And if you're able to achieve your target for the week, you are going to have another incentive that, okay, this is what I'm going to do. Maybe you want to uh maybe go visit somebody, or maybe you just want to go out to do some to a park or something, all of those kind of things. So at the end of the month too, you also have another reward system. So that's just it. So your brain begins to react to that. So your brain will be stimulated, yeah, to always follow the plan. So we think that human beings, that okay, whenever you use something to attract them, that they come. It's not just that, because your brain also, is involved. The way your brain begins to work, because the way you think too also affects your trade. So trading is personal. Trading is personal. So a reward system for what you do. So that's just that. Let me show you template. So the thing is, when I started trading, this is my first journal then was different. First journal I was using, I think I started using Telegram, my journaling. But before then, I had an hard copy journal that I was using. I had an hard copy journal. Are you there? Hey, did I end the call?
The thing stop. Said it stop sharing screen. I think there was a network problem.
Okay. All right. So I hope you can see my screen.
Not okay.
Hi, Bana.
Load. Load. I felt.
You see it now? Hi, Bana. What are you saying? Is it blank?
Yeah, it's showing blank, but it's showing load.
Well, give me a minute. Hi, Bana. Do you see it? See it.
Should I?
Do you, do
I
you,
don't
do you see this one? You don't. Then maybe it's